Adventure sports like mountain climbing, big mountain skiing, and hunting are not for the timid. Neither is hunting for bargains in a bear market. What kind of investor are you? Are you the adventurous sort? Then we might have one for you tonight on Open Interest. Hi, I'm Mike Coe. Bear markets are challenging environments for investors and traders. I'm sure you've heard the old joke. Two guys are confronted by a bear. As one prepares to run, the other says, "What are you doing? You can't outrun a bear." To which he responds, "I don't have to outrun the bear. I just have to outrun you." And in some ways, stocks behave as if that's how it works. It's usually the most speculative and weakest names that fall first. But bear markets have voracious appetites, and sooner or later, they come after the prior bull market's biggest winners too. In fact, this year, until recently at least, only one sector appeared to be immune: energy. The pandemic slowed global energy demand and subsequently production, but demand moved faster on the way down, even causing WTI to trade in negative territory for the first time, and demand moved faster on the way up as well. The energy market was already seeing fast rising prices when Putin added fuel to the fire, or perhaps more accurately, started a war that ended up taking fuel from global supply. Even now, XLE, up over 32% year to date, is outperforming the next best performing GIC sector, utilities, by nearly 40%. Even so, the energy sector is not immune to sharp pullbacks. XLE, the energy select sector ETF, has dropped over 20% in just the past 2 weeks. This kind of volatility can startle the most seasoned investors, and it may be tempting to roll over and play dead. Hope the bear only sniffs around you and wait for it to go away. But bears are also known to nose through the trash, searching for things that have been discarded, possibly worth another look. An example an adventurous investor may want to follow. Today, as I do most days, I was monitoring options flows for big prints. And of course, the usual suspects, Tesla, Apple, Amazon, Meta, and AMD, were right up there. But companies like these are among the most scrutinized. There's little chance a tasty morsel will remain in something so picked over. Interested in the road less traveled, I continued to comb through the list of names looking for a ticker I didn't immediately recognize, and I found one. CLAR. Headquartered in Salt Lake City, Utah, CLAR Corporation is a leading developer, manufacturer, and distributor of outdoor equipment and lifestyle products focused on the climb, ski, mountain, and sport markets. While you might not recognize the name CLAR, you may recognize some of the brands in their portfolio, which includes Black Diamond, Sierra, Barnes, Peeps, Skin Nourishment, and Rhino Rack. What was the trade that caught my eye? An opening purchase of 25,000 December 2030 call spreads. The buyer of those spreads spent over $6.5 million in premium on the trade. And I realized that in the days of deficits in the trillions, millions in premium might not sound like a lot, but in this case, it really is. CLAR's market cap is less than $700 million, so the options premium on this trade is nearly 1% of that. More importantly, 25,000 spreads represents 2.5 million shares, or 6.75% of the 37 million shares outstanding. Now, companies the size of CLAR don't typically get a lot of coverage by the mainstream business news media. But this is a company that is led by a seasoned team, which is managed in large part through strategic M&A to build a high-quality niche brand portfolio. Attractive gross margins of about 38%. The company is forecasting 4 to 7% compound annual growth rates across their verticals, which, it should be said, have substantial addressable markets relative to their size. At today's closing price below $19 a share, the company is trading less than 13 times full year 2022 EPS estimates of about $1.46 and 11 times full year 2023 EPS estimates of $1.69. If you're concerned about debt, given their strategic acquisition strategy, the current net debt is less than 3 times full year EBITDA estimates of just over $54 million. And while the company's valuation, net of a nearly 33% year-to-date decline, appears reasonable, the same cannot be said of the options premiums on CLAR. They're very steep. The buyer of those December spreads paid an average of $2.61 per spread. That's nearly 14% of the current stock price on a bet that needs to see prices 21% higher than today's close just to break even as of December expiration. Now, normally, I would be inclined to use diagonal spreads, purchasing longer dated call options, maybe close to at the money, and selling shorter dated out of the money call options to offset the high decay those elevated options premiums will tend to create. However, as a percentage of the company's size, this trade is so large, I can't help but wonder, is this trader making a run at the company or speculating that somebody else will? In any case, I'm not that inclined to cap my upside in case this thing does actually bounce off of these levels and make a run for it. CLAR is a company that makes products for adventurers, mountain climbers, hunters, off-roaders, and the like. These people play where bears live and eat. Buying stocks in a bear market isn't for the timid either. But despite the dangers, the risk may be worth the reward in CLAR. How adventurous are you? If you enjoy this kind of content, please don't be afraid to like, comment, and subscribe, and I'll see you in the next one. Thanks for watching.